Now the fourth setup that I'm using combined with the Forex Profit Supreme meter is when we have really strong move and we don't see a retracement to use with the Fibonacci, and I will show you what I mean with an example from today. So right in here is pound Canadian, which has been very obvious on the Forex Profit Supreme meter, but not right after London Open. At that point over here, the pound was not at the top, and then after this impulsive move at about 20-30 minutes after the opening, pound climbed on the top and CAD was on the bottom. I had confirmation from the high time frames, everything is in order, like high highs and high lows, but price on daily is above the moving averages, and on M15 it looks very bullish. However, once I had my retracement in this way, the price failed to reach 61.8 and continued higher, and even I moved the Fibonacci, it still continued higher and higher and higher, and it was a fantastic move that still continues, right? It's targeting 423 with that Fibonacci. So in this case, what I do is I would place a pending order once I see that we have a very strong move. We have confirmation from all the indicators I'm looking at, and I don't see the retracement to the 61.8 or 50. I place a pending order just one pip above the top. So it would be at 162.51. Right about here, let me put a horizontal line. And at that point, I just enter with a buy stop. Buy stop is a limit order that will execute once a higher price from the current one is reached. So if we are below and we want to enter at a higher level, we can place a buy stop. Obviously, if it's a quick move, you can do it manually, but I prefer to use pending orders. And then I can still use the targets from Fibonacci, which work really well according to me, if the Fibonacci is used properly, or I use a trailing stop loss. In this case, trailing stop loss would have worked perfectly. Or if you decide to take the profits at any moment, you can do that. However, I have a limitation of 50 pips for that initial move. Okay, because obviously we can do it in here, we can do it in here, and you don't want to really jump at the top where the move is already gone, right? So 50 pips is my limitation for this retracement if I use it. In this case, it is from 162.05 up until 162.50, so exactly 45 pips. If I am within 50 pips, I will use the break and using a buy stop or manually. But if the move is bigger, like 60-70 pips, and then to enter after such move, it becomes risky that the move is already gone. In this example, we had a very impulsive move. The pound CAD was the most obvious trading pair for the morning, but I put the 50 pips as a limitation, and if I miss it, I just missed it, okay? I take the fact that I have missed the move and I don't want to jump into a move that already did over 50 pips. I hope that makes sense, because if it is bigger than 50 pips, then our stop loss would be really big. In this case, the stop loss below 162, or let's say 161.95, so we are below the roundish 62, would be a distance I can afford to have as a stop loss. But let's say I have that move and I see the price not retracing, and then I use the break, then the stop loss becomes really huge. And that's something we want to avoid, right? So 50 pips as a limitation if you want to use the breakthrough setup that I have, but only when we have a very strong currency versus a weak currency and the price just goes up, or it could be the opposite way, it goes down. There is no retracement, so you can use this break setup, and hopefully during the FTMO challenge I'll be able to shoot such an example.